Yo guys, what's going on? Welcome back to another weekly forecast. Before we get started, I'm going to quickly run through the VIP results, talk about how CPI and last week went, and then move, with the forecast going into next week. If you haven't already, please click the link in the description and join the free channel. I share a lot of free content, especially on a lot of analysis and setups for free. Who doesn't like free stuff really? Do they? So yeah, jump into the chat and let's just get straight into it. So looking at the VIP results, as you can see, Monday, Tuesday were like non-trading days for me because we had CPI on Wednesday. There was a setup I did see on Monday, but I just noted that down in the journal, probably because it was a Monday after NFP from the week prior. But yeah, there was a setup on Monday, so we could have taken that, but I didn't. I wanted to stick with the plan this week and stay and wait till Wednesday, see what it brings. Wednesday was a bit underwhelming because we had the right analysis for CPI, but CPI decided to sort of not trigger our limits, hence why the gold was only at 0.5. We did have the right analysis here on gold, but it just kind of went without us really. Thursday, similar sort of thing. So with PPI and CPI, just lackluster events really for me. Thursday, this loss here on US100, I'm going to talk about that and then talk about the win that we took on US100. Let's quickly break down these trades, and then after that, we'll get into the weekly forecast. So let's jump straight onto the charts on gold here. Let's go to US100. Now, what we got is we have this on here. Right, so initially you can see that from the weekly open, which was around about from here, there's a weekly open. You can see that the weekly low is here. And as price was trading up here for the start of the week, this is a bearish sign. That if price sort of kind of moves up, takes out the prior weekly high, as you can see from here, we already took that out on Monday, right? Price came back down and then carried on back up to move higher and moved higher. This is a sort of 3 push liquidity run here. You can see that we had 1, 2, and then 3. You're expecting a bearish move from here. So once we did get this bearish move on Wednesday, we were looking for some sort of like retracement to enter to at least clear out these lows here. We didn't. Price went all the way down here. So then I expected going into Thursday that we were going to get this retracement to push back down, right? It was at this area here where you can see from 10 a.m. till 11, 12, 13, 14, 15, 16. So we consolidated for literally 4 hours. Right, well, I can't count. 1, 2, 3, 4, 5, 6. But let's say about 6 hours, yeah. We consolidated for 6 hours, and it was this trade which kind of got me a bit tedious, and hence why you can see if I go back to the chart, it's a 0.2. It's because I closed that entry. I'm a day trader. I don't want to hold overnight, right? But from here, you can see that these lows right at the bottom here have not been collected yet. Tap, 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 right? One thing that did kind of put me off is notice how we have a swing low at the start of the weekly open, right? I'm going to mark that and drag that across, right? Notice how this spike here did not take out this swing low there, right? So on this whole move, I was looking for sells because price is now in a discount, in a premium array, right? So you want to look for reversal patterns plus SMT here for price to fall back down here. Obviously, yes, you can see that price did fall, but I'm going to get onto that on what happened after. But when I went onto the futures chart, and this is where I had a bit of a little, I got really annoyed when I saw this, was if you look at this weekly open candle on the futures chart and drag it across, notice how this spike was below that low there, right there, yeah? So with that sort of what's it called? What's the word for it? With that discrepancy in data here, the futures chart showing that it did take out this low, it would have been buy positions that we would have been looking for during this day because we collected the liquidity around our fair value gap. As you can see, I'm expecting for price to take out this liquidity. However, because we didn't take out that low on the other chart, I was just focusing on sells. So I missed half the move. And then when price came into the sell area, it was already the end of the day. Then Israel decided to go and attack Iran for unprovoked, really. I don't want to get too much into that, but I know there's going to be a few that stand alongside me here. But you can see that then Israel decided to go and attack, and then that's when the market just absolutely drops and goes to our target. Obviously, yes, it's unfair that a lot of people are profiting off war, and this why when we do see these moves, we keep it to ourselves. I'd recommend that to anyone, right? Similar on gold. I seen a guy who was posting in the group, not mentioning any names, but he started saying that yes, the power of holding a trade while Israel is dropping bombs in Iran, and it just didn't feel right to me because yes, he's making money, but there's other people getting bombed. So whenever it comes to these, like I'll recommend it to all of you guys as well. Yes, we're making money on the markets. Well done for getting it right. Fair enough, you did the hard work and you got it correct. But when it comes down to invasions and war and stuff like that, I try not to get excited over it, because yes, we've made money on our side, but somewhere on the other side of the world they're kind of feeling the pain of what we've sort of profited off, really. And that's kind of how these markets are moving. You can see that liquidity was building up over many days here on US100. Price then kind of created that structure break, as you can see here, 1 2 3. We created that structure break. Price closed back below these sort of bodies here. We had loads of bearish candles. Price retraced and then gave the main move, and this was all targeted on purpose. The market obviously knows that we've got some manipulation in common. This is all manipulation for price to go down. Price manipulated, and then we then had that retracement into that sort of key level, and then price absolutely dropped. And then Israel obviously sort of did what they did, and then that's that trade. Obviously, I won't talk about that trade as much, but going into the next trade here on Friday, where we ended up sort of catching that lovely move on US100, was this trade right here. So notice how we have this 1 hour fair value gap, which price was staying above, right? When price tends to close below a 1 hour fair value gap, it becomes an inverted fair value gap, right? So we have an inverted fair value gap here, right? So now price should not push above this inverted fair value gap if we want to stay bearish for a bit. So notice on Friday, we did the similar sort of thing. We fairly left some equal lows here, right there. We left that low, left it here, and the price traded back up to this inverted fair value gap. If I drop down into the lower time frames, notice how my entry was around this inverted fair value gap. Yes, we did take the quick trade. I had to exit. It wasn't the clean one we wanted, but I did see this sort of manipulation coming. We can see that we have these equal highs left here, right, before New York opened. This is where time is very important here, guys. We have these equal highs left here. We wanted to see what happened at New York opened. Once New York opened, price pushed up, taking at these highs right here, which means that the liquidity from the buy side has now been collected. We can now look at sell side liquidity. This, if the market tells us that it wants to reverse. It's in an inverted fair value gap here, so hopefully we can see some selling pressure kick back in, and we also are rebalancing some of these fair value gaps on the left here. So with the price obviously pushing back up here, if we drop down to the 1 minute time frame, we can see that we are starting to get that as reversal structures here, where price pushes up, and we're sort of creating that three step liquidity run, as you can see, 1 2 and 3, and the third one breaks down. Notice the bodies. Look at the bodies of the candles, right? Look at where these bodies were initially. They were in this area, and then price closed below this whole area. This is telling me that price wants to turn around, right? So we use the nearest inverted fair value gap here as support. Price obviously spiked up, closed back inside. We then got a shift, change in the state of delivery. I then entered on a retrace right here. Then you can see that price pushed down. We had the news at 10 a.m. which gapped up into this area, right? And I expected this to hold. My stop loss was above here initially, and then I aggressively bought it down once I started to see this price action. And you can see this on the video that I shared right here. This is the trade that I'm talking about. So that was our fantastic trade. We ended up closing the trade right here at the sell side low. Why is this sell side? This is sell side because it is a New York open. Give me 1 second. My cat is crying to get in. Right, so that's New York open. Once New York open was collected, we then ran straight back higher to continue the move. That's all you need. Just this little move here, and that was 3%. So that was pretty much it on that little breakdown right there. Let's quickly run into the weekly forecast. So if you start having a look at gold, yes, I did send this analysis on gold here. Let me show you what it was on the VIP group. And on the VIP group, it was something like this, where we can see that we had a breakout right here. I was expecting for price to retrace to attack this high. But price did take out that high initially and then started to retrace back into this inverted fair value gap around about 34.24, 34.25. If I go to the charts here, we have a look at 34.25. Where are we? 34.25, 34.24 level right here. You can see that price initially tapped it. We then flew 100 pips. Price came back down, took out the early buyers. And gold does this a lot. It does a sort of double purge thing where it takes out the sellers, takes out the buyers, and then decides to sort of climb up. You can see that sort of at lunchtime, we then decided to get that structure break right here. Notice how we didn't get a clean structure break here. This was a first tap and fly. When I see these sort of moves, I'm not getting excited, right? Because I see that there's still liquidity from here. It hasn't purged it as cleanly. We have a tap, we have a move back up, right? Do we have another push back up here? No, we don't. We get another break below. So price is still following a downtrend. I don't know, a lot of people tend to buy as price is moving down, thinking they're getting in a better position. However, it's not even ready yet, right? So notice from this candle here, what happens? Price pushes down. Again, does it break that high? No, it doesn't. Pushes down. Does it break this high? Yes, it does. Changing the state delivery kicking in right in the POI. Time to start looking for longs, perhaps, right? Price retraces. Where? Back into this order block candle, right? Clean candle. This could be even a breaker right into this breaker right there. Changing the state of delivery. You buy right there, and then you got a decent reaction towards the end of the day. And this is being patient, right? A lot of people wanted to buy. A lot of people missed the buy because the buy went straight up. It came back down for you guys. And yet you missed it again. Why? Because you're selling. So this is where we sort of have to get involved and in line with the market and have that patience really, because time will kick in itself. And you can see right on this tap, right in the sort of PM session macro, 145 to 15. Simple as that. So you got into that move right there. I didn't enter this move. The reason being is, we're in a sort of tricky time here. I have a feeling that the market could even just gap up and open up here. That'll be that with everything that's going on, but I just don't want to sort of get involved, especially when there's loads of stuff going off over the weekend. I don't want to sort of just have the market gap down because we have all of this gap. So let's quickly jump into the weekly forecast. Sorry about that. I wanted to get that off my chest. So weekly forecast, you can see the price started pushing up here, especially along with the Israel news. Price is above prior weekly high. What do we do going into this week? We mark up the current weekly range. I love doing that. It's what helps me a lot to sort of gauge where the market is. That's an arrow, wrong one. Let's mark up the current weekly high, which is here, like so, and then that's prior weekly high there. And then we mark the prior weekly low, which is down here. So it's a very big range we got to trade with here. I'm not expecting this prior weekly low to be taken out. I'm expecting for price to stay above this prior weekly low now, price to stay in this range. Looking at the daily time frame, as I said, guys, follow the high time frame. People are thinking that, oh, is this going to turn around now? Guys, it'll only start turning around if price closes back below the prior weekly low. Simple as that. Otherwise, stay bullish, bro. Just keep buying the thing. I don't see why people are trying to sell the thing. This is the all-time high right here. I don't have a tag for an all-time high. It's a shame. I'm just going to put buy side. Right, there's your all-time high. Prior weekly low, did we close back inside? No. Sorry, this key level here, we closed above it. As you can see, there's a green line on the top here. I'm expecting price to potentially retrace. I'm watching this daily fair value gap right here, right? Notice, I'm gonna point this out to you guys. It's been very key. It's happened quite often where price has respected these higher time frame levels, and I say it time and time again on all of my sort of videos. The swing traders are loving it right now. Why? Because if you zoom out, right, and just go into your charts and mark out every daily fair value gap. Well, the key ones, right? If you know how to mark up the key daily fair value gaps, you'll start to see this thing. So a key daily fair value gap, which broke out, right? Price broke out. It came back down to use this as support, right? Price flew. If you bought here, stop loss below daily fair value gap, you would have been, crazy profits. What happened again? Price came back to this daily fair value gap. Price pushed up. right? Decent. You would have been looking for buys. Price then broke here, and then it did it the same thing again. Price pushed up. It then came back down. This is a sign that this daily fair value gap is likely to be broken. Where's it going next? The next daily fair value gap. Where's that? Right here. Price tapped. It started to fly. So now it's using these as stepping stones. And the reason for this main daily fair value gap to hold goes off the following hours that this is back into discount, right? The rest of the daily fair value gaps were not. If you make this in a bullish dealing range, you can see that when price tapped here, it was 50%. Hence why we had a bigger impulse rather than this lackluster one. We had a bigger push up, price came back down, it wanted to go deeper. And there are some weekly fair value gaps in here. I'll just quickly show you. You can see right here a weekly fair value gap right there, right? So when price tapped into this one, it's a weekly fair value gap, and it's also a daily fair value gap. That is the reason why we're sort of getting this change in state of delivery, where price is just starting to attack the all-time high. So with that being attacking the all-time high, we then need to start seeing the same principle hold going forward. So what do we see? Another daily fair value gap. Price pushes back in, pushes up. It came back down, uses the new week opening gap, and immediately started running towards the upside. The same thing going into this week is what I'm going to be expecting. Price may push up. Cool. Let it push up. Because I'm sure we'll have a quick retracement back to the downside here, and then price could continue. Might be next week, might be the week after, right? But price could potentially even take out the all-time high. Don't be worried saying that should I start selling. Just wait, because then price could sort of slowly start falling back down again, and you'll be ready for another buy move. So I'm going to be patient, waiting around this area. Price is really high at the moment. You can be aggressive and start following the sort of smaller time frame structure as like, oh yes, price is holding this, it's going to move up. But if you want to be safe, and knowing how gold has been moving for the past few weeks, I'd be looking for those key areas on the higher time frame to hold, for price to retrace back into these daily fair value gaps, and for price to then attack the buy side. So that's the weekly forecast on gold. Going over to US100 here, let's have a look. We have a similar sort of thing where price is starting to give that big retracement, and I'm expecting for price to continue its run towards the all-time high here. So if we use this all-time high right here and drag it across like so, or buy side, we can then see that price is kind of doing the same thing. We have a big push back down. Yes, we may see some selling pressure at the start of the week, but I feel like US100, the indices, the stock market, should continue its rally back up. But where will it be? When will it be doing that is what we're trying to look for. If we just sort of close this door 1 second. Apologies. It's just getting quite loud in the household. Right. Let's have a look at what's going on here. So on a daily time frame, if we follow these things, this is what I was trying to tell a lot of people in the group. If you're not in the free group, the link is somewhere in the description, or it will be on the free channel. When we start seeing moves like this, we need to start seeing how the higher time frame will hold. The reason, what I mean by that is you'll start to see bearish candles should hold as support to bullish ones. So you can see that price came back down into this bearish one, pushes up, right? What happens after? We have another bearish candle. Price pushes back down into this and pushes up. Now this move here is price pushing back down into these bearish candles here. So going into next week, I'm expecting for price to hold a support here and push back up. So on US100, it's going to be very key to see the prior weekly high and prior weekly low. So let me mark those up for you, and then you'll see where we're trading. So if I mark the weekly low, which should be this right here, and drag it across, this is the prior weekly low. Let's just go on the weekly time frame, it's easier, and then mark out this prior weekly high, prior weekly high like so, and then we drop down into the daily. This is actually really long. Across. So this is your range that you're trading on. If you look on the hour time frame, you have a nice clean range to use now. So in short, what you can be looking for is, yes, you have equal lows right here. I have a feeling that price will take out these lows to drop into this area here, right, where we had this bullish impulsive run. Prior weekly lows also there. So what we could see is initially you can see that price is creating liquidity above these highs. This is trendline liquidity for the people who are trading trend lines, right? You want to see price push back down below the prior weekly low, take out the sell side, take out the sell side. You know, we've got the monthly open right here as well, right? So it wouldn't be, you know, too bad for price to come back to retest the monthly open, right? So you could get something like this where price pushes down, breaks a structure, pushes back above, holds, and then price could continue its run towards the prior weekly high. So going into US100, this is what I'm going to be watching. I'm going to be keeping an eye on that prior weekly low. In terms of news, we have retail sales, housing starts, and then we have the interest rate decision on the 18th of June. In terms of what comes out of this interest rate decision, I don't really focus on it too much. If it's something significant, I will start changing, you know, in terms of what the sentiment of the market is telling me, and what the overall macro is of the whole market. But at the moment, I'm seeing this as just a pullback for a price to continue rallying. Yes, there's wars going on, so things are going to be a lot more volatile, so just be careful. But this is what I'm going to be looking for price to continue its run to the buy side right here and to this prior weekly high, which is what we left on this area here. So let price push back down to the discounts, retest some certain key levels. If we mark this as a dealing range, right, you can mark it from low to high here. You can see that this is a bullish dealing range. Price is still above 50%. Let price push back down into our discount, guys. Yeah, in this whole area is a whole buy zone, so we can have a lot of reversals kicking off in this area. So let price kick back down, get in some buys, and have fun with the market. Wednesday is going to be the key day. I believe it's Wednesday. Is it Wednesday? It should be Wednesday. Wednesday evening, key day for reversals. So I have a feeling that the low in the week might be created on Wednesday. So you might have Monday, Tuesday, Wednesday bearish days, and then Thursday, Friday bullish days back up into the range. That's pretty much it from me. So WasteFX. If you enjoyed this video, don't forget to leave a like, comment on what you enjoyed, and subscribe. As always, links in the free channel. It's been a WasteFX. Peace out.